Today's February the 26th. Let's just do a very quick recap and look at a couple of things that we haven't looked at before. One is the McClellan oscillator, which basically is showing advances versus declines and trends in the marketplace expressed by looking at advances versus declines. And we're trading within what's called a normal range, but we see we got a little bit ahead of ourselves here in January, where it was the advances led the decliners by such a large number that it was just unsustainable. We had to come back, we came back down to the neutral line, and now we're just within the range where, historically most of the A to D numbers have been. Tomorrow morning you can take a look at the Wall Street Journal's public page for advances to decliners. This is the 25th. If I update it, they haven't got the 26th yet, but we can show that a week ago we had the advance volume was almost 3 million to 577,000 for declining volume. Pretty big spread, about 2.4 million. That has gotten narrower on Monday. Sorry, that would have been Friday. This is Monday, where we've narrowed the gap a little bit. So the advances to decliners is tightening up. Let's take a look at that tomorrow morning. So really quickly, one more thing. The market really did, the futures really did tail off here after 3:15. We saw it actually close below yesterday's low of the day, which is this blue line. Let's look at the daily Ichimoku. So the S&P 500, flat to slightly down by 2. The Chiku span is still above the cloud. Apple just drifting as we said that it would, and we hoped that it would based on positions that I've closed and short positions that I'm holding for short puts. Gold, all gold did today was close this gap that occurred last week and then pull itself back up above. So you've got this iron cross type of day where the candle finished a little bit below its high, but well above the low. So we closed that gap. Now we can get rid of that. It's not something that we need to look at. Global Payments Network, we looked at that yesterday. We're hoping for a little bit of a pullback to be able to buy this strong stock. Caterpillar started the day with a decline, and I posted something very early in the morning showing that the analyst at UBS didn't really have a very good track record with Caterpillar. He's been buying when he should have been selling, and now Johnny come lately, he suggests that maybe we should sell now. The market didn't think so, and it started to recover after the open. I'm going to show you 15-minute charts in a second. Intel had basically a flat day, just up 8 cents, and I got out at one position and then bought back in again, so I'm still at 3/4 of my desired position. T, which had some news today by an appeals court ruling that the merger can go ahead between AT&T and Time Warner. WDC is still a nice stock. We thought that it would have resistance at the top of this gap from December, and it never made it up to the top of the gap, but it's still now in between. It's looking at the support of another gap below it, which was after yesterday's big pop. But I was trading Intel on the 5-minute chart because I thought that it was really interesting. And if you're following the tweets today, there were several of them pointing out what was going on in the 5-minute chart. We did have a breakout later on in the day. This would have been the candle to buy on right here. I bought later in the day somewhere here because I was out. I don't like to trade between noon and 3 o'clock, so I usually just leave entirely. I came back a little after 3 and put back on the position that I had sold in the morning because I still think it's a good stock. Here you can see Caterpillar on the 5-minute, how it moved its way up all day long, started to tail off at the end of the day, and it was the 5-minute cloud that provided the resistance, and the 5-minute cloud on Apple that provided support at the end of the day. So 5-minute cloud is always very, very good if you're looking for timing to get in or out of a trade, but always follow the Chiku span as well. Because as I was pointing out today, there were opportunities to buy in here when price had broken through the 5-minute cloud, but you were having the trailing Chiku span showing support on the bottom of the cloud, but then losing it and then struggling all day to get above the wall overhead of candles. And then finally it did break out. So you could take a look at the 15 and see if the 15 agreed with you, and it did. And the 15 struggled all day long underneath the candles, but it did break out. So I think it's a good time to get back in again, and that's what I did just after 3 o'clock.